Welcome to the Rethink Series, brought to you by Angel Ventures and IDB Lab, the innovation laboratory of the Inter-American Development Bank. During these COVID times, startup founders are scrambling to find their way in the current situation and adapt to a new normal. And startups in emerging markets are no different. Yet there are some unique challenges and opportunities. There are some thriving startup ecosystems in many markets. Yet comparable emerging markets of Latin America, the Caribbean, MENA, Southeast Asia, they make for unique opportunities along certain sectors which we should be rethinking, considering the potential impact post-COVID. Global investors and corporates are already taking notice, and they've already signaled an increase in funding for some of these sectors. IDB Lab, being the most active venture capital investor in Latin America and the Caribbean for the last 20 years, is supporting this initiative led by our trusted partner, Angel Ventures. They have been doing a lot of work to support the ecosystem, and now we welcome their efforts on building bridges to other emerging markets, to build those synergies that I think can prove more valuable now than ever. So we hope you enjoy the webinar, and more importantly, that together we reimagine how these verticals emerge after the pandemic to generate a positive impact in Latin America and the Caribbean, and that you also join us in rethinking the future for startups. Thank you.
Sorry, I was in mute. So hello, everyone. Thanks for joining for this super interesting panel to hear, actually from an investor's perspective, how them and their companies they invest on are reacting to the current context. There is a lot to talk about, so let's get started right away. Some of housekeeping, we'll have 3 rounds addressing different aspects of this gentleman perspective. No? So I'll try to make sure that we keep up with schedule in order to address all topics. So for the first round, obviously, it will be good that all of you panelists today give a brief intro of your company and yourselves, and also talk a little bit on how has COVID-19 has impacted your local market. So let's just get started. Roberto, why don't you start now?
Good morning. Good morning, Nora. Good morning, everyone. Thank you for having me. It's very exciting to be doing something else with Angel Ventures. I'm a co-investor with Angel Ventures in a portfolio company of them called Homey. And I know Hernan and Camilo very well. Hernan and I go back long. I used to work actually with Nora before. We worked at Prudential and many years, like 10, 12 years ago. And after I left Prudential, I've been investing mostly as an angel investor in Proptech companies and fintech companies in the US, in Mexico, in Colombia, and Uruguay. I've been doing things on my own. And recently joined some former Endeavor guys to launch Matter Scale Ventures, which is a venture capital fund that will be targeting Proptech among the other areas of interest. That's pretty much about myself.
Thanks, Roberto. It's very nice looking at you virtually, at least. Then Ross, your turn.
Hi, Nora. Thanks for having us. So hi, I'm Ruzgar. I am one of the partners at Next Billion Ventures. We are a global emerging markets venture fund. So we invest across Latin America, Middle East, and Southeast Asia. We only invest in those markets. And Proptech is one of those consumer marketplace models that we like a lot. We have 3 investments in the space, 1 in Brazil, 1 in Mexico, and 1 in Vietnam. And we are adjusting, and our companies are adjusting, I think, just like everyone else. I think you asked us to kind of comment a little bit on what we're seeing in our markets in terms of the reactions and how we're dealing with it. What I would say is, and I'm sure we'll get into it a bit more deeply, but All the venture firms and all of their startups at this point, I'm sure, have made their contingency plans. They've looked at what their resources are, what their spend is, and tried to optimize that to get through this crisis, and certainly through the end of the 2020 fiscal year. I think that's how many people have approached it, and we and our companies have done the same. Maybe if I can add like 2 sentences, we have the privilege of investing across these markets. So it's not just Latin America, but it's some other geographies as well. And so we did see this crisis sweep the world from east to west. And we also see countries coming out of it, hopefully from east to west. In that sense, Latin America got hit a bit late, and hopefully will have the benefit of learnings from other countries and will adjust as a result a little bit more nimbly. We do think that this crisis, is harder on emerging markets. It's harder on the developing world compared to the developed world. And so from a macroeconomic perspective, I think all of these markets, including Latin America, will continue to be hit a little harder than, say, the US. But we're extremely bullish on what technology can do, even in an environment like this one.
Thanks, Ross. Camilo, your thoughts.
Thanks, Nora. Well, it's we were just saying on what Ross was just mentioning about Latin America being hit sort of last. We were just having that discussion last night with my partner about how, unfortunately, it is now Latin America's turn to be at the epicenter of everything that's going on. We are a firm that focuses on the Pacific Alliance member countries, which is essentially Mexico, Colombia, Chile, and Peru. We also have a percentage of our current fund, that can be deployed in observer members of the Pacific Alliance, which is very broad because there are 53 observer members, including South Korea, where we have a very strong partnership with KBIC. And so our thesis is broad. We also love the global emerging market portion of the thesis. We also believe that in certain models, and Proptech certainly being one of them, the models that will succeed or prevail in our parts of the world will be from our parts of the world, and not necessarily something imported as we see in other business models from the US or Europe. We have this term that we use a lot, which is global emerging market winners. And we define companies in that are global emerging market potential winners as companies that don't have a business model where necessarily you need to deploy into the US or Europe to be successful, but you can achieve tremendous scale and be very meaningful working only in emerging markets. And we certainly think Proptech, as I was saying, is one of those verticals. How have our companies adapted? Very quickly. We're not going to reinvent the wheel here. And if I had a dollar for every time I heard in the last few weeks, cash is king, I would have many, many dollars. And now at 23 pesos per dollar, that would be great. But look, the reality is we have had to work with each one of our companies individually, different situations for every portfolio companies. When you have a portfolio of somewhat early stage, you will have companies inevitably that have 3 months of runway, and we're in the middle of racing around when all this happened. And we have companies that had 18 months of runway. So you can't have a cookie cutter approach, and our companies are adapting on an individual basis. But across the board, I can tell you that we have focused on cash conservation, because if you didn't have cash, it's an obvious thing that you need to do. But if you had cash, as the case of the company where Roberto and as it were also Cliff, we're all co-investors in Homey. They had just raced around and they were flush with cash, but our focus has been on conserving that cash so that they can properly implement the tactics and the strategies that will make them leaders after there's some sort of normalcy that we can see in the market, right? So I wouldn't wanna say one thing, but I'd say the conducting thread has been cash conservation, of course.
Really agree, Camilo. Definitely. Cliff, if you can share your thoughts now.
Sure. Good morning, everyone. It's good to see a lot of friendly faces. I work for Equity International. We're a private equity firm based out of Chicago here in the U.S. Our business is really focused on investing in real estate and real estate related operating platforms, primarily outside the U.S. So it is, our business is a bit more focused on, asset intensive or traditional real estate companies. But some of those companies are earlier stage, more venture-like, and we have made some investments in some more asset-like technology-oriented businesses. One, because we think, those businesses in and of themselves are interesting, but also may provide different levels of optionality for us in terms of capital deployment opportunities. So we've been pretty active in emerging markets historically, but also looking at more developed markets more recently in more emerging asset classes, how technology is impacting those markets as well, but continue to be internationally focused across a variety of markets. In terms of our portfolio, I tend to joke that unless you're Amazon or Zoom, you tend to be impacted in some form or fashion by COVID, and our portfolio is no different than that. We have examples of some hospitality businesses, retail-oriented businesses that obviously are much more impacted than others, but we're also fortunate to have in the portfolio more defensive asset classes like self-storage, residential, telecom infrastructure. So I think it's always the basis of why a good diversified portfolio is always beneficial in any market, and I think that diversification is serving us well in times like this.
Thanks, Cliff. I totally agree with you. It depends on the asset class also. No, in our case, multifamily has been resilient, and definitely technology. It's an important aspect to support this resilience. No, definitely. Thanks, Cliff. Al, I think it's okay to call you Al, right?
Yeah, sure. You can call me
Right.
Al, Alistair,
Alistair, whatever.
Just call me Jonathan. Hi, yeah, so I'm Alistair Sheriffs. I'm VP of Growth for Property Finder Group. We are a property portal based in MENA and Turkey. We've been around for about over 10 years or so. And I guess the impact for us, I guess there's a couple of bits of context really, especially in the UAE where our main focus is and where we're kind of the #1 portal, which was there are kind of deep scars still from the 2008 crash as a country, which kind of is an interesting bit of context for how people reacted. Secondly, obviously, we live in a country predominantly of expats where there's no governmental support for workers or any kind of, welfare state or anything like that. So to kind of put another dollar in Camilo's pot, it kind of really was thinking about how cash is king and what can we do from that, both from our point of view as a business, and then also trying to understand, what is our life source, which is our clients and all the brokerages. So a lot of them kind of really retreated into their shells immediately, again, with kind of the memories of 2008, I think, in the back of their minds, thinking that this could go on for a long time and they needed to kind of make savings as quickly as possible. And we similarly had to look at that. And I guess the most interesting thing for us in the UAE, at least, was how closely our performance kind of matched the government's reaction to it. So as soon as 24-hour lockdown was announced in the UAE, for example, our traffic and our leads and stuff fell off a cliff. But then equally, as they started to kind of relax some of those rules, it really kind of tracked nicely alongside that. And we're in a situation now post-Ramadan and post-Eid in the Middle East where I'm pretty much up to what they were at the start of March, which is before kind of the crisis really hit here. So that was really interesting. Some of the other markets, such as Egypt and Saudi, have probably had slightly less dramatic curves. And then, of course, in our part of the world, we've had then the added bonus of Ramadan as well, which always kind of messes around with the numbers. So it's been really hard to try and predict in certain markets. But in the UAE, at least, it's really kind of tracked the way that the government have responded in terms of kind of social distancing and locking down and things like that.
Nice. Thanks, Al. So that was, let's say, for the first round. Thank you all of you guys for sharing your initial thoughts and give some context on how you have addressed this and how and what is your perspective on this whole pandemic thing, no? Now, to be a little bit more specific, no, and to start the so-called second round. It will be very good if you can share some thoughts on how have your company reacted to the pandemic situation, you know, like more specific, no? Maybe addressing on how is actually Proptech reacting in emerging markets, different to developed economies. Also share what are your thoughts on innovation? Are we in emerging markets up to the challenge now? Or are we still catching up to developed ones? And also, what about companies and clients? No, how are they handling the crisis? Maybe some best practices will be very, very useful and very nice to hear from different perspectives. And how have you engaged with your stakeholders? Some actions, like very specific actions, some here and there, some are cutting expenses, some are some have some freezes on new hires, like very specific actions. And then, of course, there will be, as you were saying, Cliff, some winners and some losers. No, we definitely know maybe Zoom, Amazon are already winners, but specifically in the Proptech industry, who do you think are going to be the winners and the losers, and what does it take to be a winner? Why don't we start with you again, Roberto?
Sure. So I think that Ruzgar mentioned that most of the portfolio companies have already adjusted to the shock on how to manage cash flow. Ruzgar, I'm also invested with him in a company called Flats, who's a company it's an e-buyer in Mexico. And for example, that company particularly has already adjusted to the burn of the cash flow. And they're rethinking their business model. I think all companies are at a point in time where they have to rethink their business model and try to figure out how resilient the business model is, because this is going to be make it or break it. Companies won't be able to find so much venture capital around, and they're going to have to, the money that they have, they're going to have to save it for 12 to 18 months. And valuations are going to be different than before COVID. And people are going to be a little bit more cautious about where they're going to invest and what kind of companies they believe will be able to take off. I used to teach, for 3 years I taught at Harvard Business School. I was teaching real estate, and I was very frustrated because the class was within the financial department, and I was trying to bring it more to Proptech. Unfortunately, the class continues today to be a finance class, and more I realized that the future of real estate is going to be in Proptech. I don't think 10, 15 years ago, people talk about online marketing and marketing. Today, they only talk about one marketing. In 5 or 10 years, people are not going to talk about real estate and Proptech. It's going to be real estate. It's going to be one thing. I think there's so much space and so much friction in every real estate transaction that technology is just here to make it easier and faster and cheaper. For example, in another portfolio company where I'm with Cliff and Camilo, it's Homey, and Homey has been able, over the pandemic, been able to close rentals of apartments online. People have been able to rent apartments 100% in a digital form. So this is just accelerating. People cannot meet, so people have to use these technologies to be able to continue doing business. And, and this is just helping people take on new ways of doing business. And this is just going to be here to stay. The same thing can be said for e-commerce. People, they knew that e-commerce was around, they had the option, but now they rely on it. So more and more people are going to be relying on technologies to make real estate more efficient, have less friction, and more cost effective. So I'm still very bullish about what's about to happen. And I think, like Camilo said, I think the business models are going to be local business models. I don't think that all the perks and things that Homey has designed is something that can be thought of if you're based in San Francisco or based in the US or England. I mean, this is very specific to the markets. And I actually think it's more difficult to come up with these models, and eventually you can migrate to other geographies and still be successful. Thank you.
So, Nora?
Thanks, Roberto. Now, can everyone at least hear me? I know the video is not working.
We can hear you well, yes.
We can hear you.
Perfect. Thanks, Roberto. Rob, some thoughts from your side.
Yeah, sure. So on the first question, how are Proptech businesses reacting to this crisis compared to others around the world? I'd say it's pretty similar. I mean, the consumer behavior is by and large the same across these geographies. There's a difference in maturity of real estate markets and availability of data and those things, but fundamentally the behavior is pretty similar. And I'm just going to check, can you hear and or see me, because my screen just went dark?
Both hear and see you.
Okay, cool. So the consumer behavior is the same. Having said that, Proptech is a big space, and there are many verticals that are somewhat differentially affected, and where the bounce back will also likely be different. What we're seeing everywhere is people want to go and physically visit the space that they're going to be living in or occupying. And that very last step of the transaction is, of course, what is becoming or has become very difficult to intermediate across these markets. Having said that, we probably would all agree that if you are in the kind of co-living space, to what extent and how quickly you bounce back, after this crisis is over, may be different than if you're in the, residential rental, long-term rental space. Some things are absolute high human needs, and others can be mitigated in different ways. And so we definitely see a difference there. But the reaction by and large seems pretty similar between whether you're in the US or in China or in Mexico. And it's difficult to react because people want to see and want to be present in the space that they're going to be occupying. And so how are our companies and many companies reacting? They're reacting on a cost level and on a revenue level. Of course, one is quicker than the other, and so cost comes first. And we see our businesses letting go of their own office spaces, as everyone at this point has transitioned to working from home. So they're taking cost out that way. We see hiring freezes. We unfortunately see cuts in the employee workforce as well. And so not many things are sacred. So everyone's adjusting on the cost side, but obviously also trying to find ways to adjust on the revenue side. So I think many people are trying to go towards kind of contactless showings, finding ways, not just 3D modeling and improving the consumer experience in terms of viewing and understanding and getting data, but also trying to find ways to minimize points of touch, trying to schedule property viewings on a contactless basis. Those are all things that everyone is, I think working on. I guess one last question that I caught was around, how is innovation different, or what does the innovation look like? We absolutely see innovation going on everywhere across all of these verticals. It doesn't always have to be innovation around data science or optimizing UX. There are many other innovations that have to happen depending on what country you're in. Getting a mortgage or a loan approved digitally is a massive innovation because it's a big part of many real estate decisions. So I think players everywhere are working on that. that's not something you have to worry about if you're, transacting in the US or in Europe. Likewise, finding ways to engage with your city government to make notarization of documents simpler, especially in this environment, is a huge innovation. And there are a bunch of things that our businesses are experimenting along that they wouldn't have to contend with if they were in different markets. But those are all innovation. I mean, other examples would be finding ways to like micro apportion credit among brokers and employees who touch a transaction to be able to compensate disparate parties, or experimenting with like online to offline models. We do see a ton of innovation going on. And of course, since these are fundamentally technology businesses, that's what differentiates them. So that's probably the most exciting part of it for us. Thanks.
Very exciting, Russ. Thanks so much. Camilo, also, if you can elaborate also not only on the previous questions, but also maybe on the differences that you are seeing between the different industries that you guys have invested on and the different portfolio companies. No, you have a very wide portfolio of different companies towards different industries. How the Proptech has differentiated from them?
Sure. By the way, you should all know that I'm always very mindful of speaking before Cliff, because I tend to be a bit long-winded, and then Cliff will use 3 words to say exactly what I meant to say, and obviously put it much better. So you have been warned that he's going to say it better than me. So I'll try to be brief. Cliff is what I aim to be as a speaker.
It's like loosening the jelly jar, Camilo. You unloosen it, and I do the easy part. You do the tough part, getting it loose.
We have this thing. It happens all the time. Trust me. So you'll see it in action in a second.
What's in the jar, guys?
I'm not gonna touch that one. That one's up to you guys. So look, I would say this. I wouldn't say the reaction has been different per industry. It has been different per entrepreneur, per founding team. Different founding teams have reacted in different ways. I think almost, and I hate to generalize, but for the sake of the exercise, I'll try and sort of frame it. I would say this: people who had very little cash, who were on the extreme and had short runways and were in the middle of racing around, those guys were quicker to react, which shouldn't be a surprise, but in some cases it was. And they implemented very harsh, very much across the board cuts. And yes, as Ross was saying, jobs have been lost, and hopefully jobs have been lost so companies can be saved, right? That's how we like to think about it, not as cutting jobs for the sake of cutting jobs. So that's one end. Then on the other end of the spectrum, you have companies that had very long runways, or very long for the type of investments that we do anyways. And in those cases, it became a lot more about making the teams come to the realization that if you didn't reduce burn right now, first of all, burning the way you were burning before this happened made no sense right now. No one's gonna get ahead of you by throwing cash onto the table. If they're gonna get ahead of you in these times, is by reinventing themselves and maybe getting additional business and getting revenue from sources they were not getting it from before. So it was more about making the founders understand that company culture, yes, it needs to be preserved, but there needs to be a company for you to be able to preserve that culture. So it was a lot of haggling on that front, I would say. And then in the middle, you have everything from people who were thinking, we're not going to cut now, we're going to wait until June and see what it means. Because again, we went through this exercise on a company by company basis, to some teams that were forecasting, well, yeah, we're going to have 50% of our sales in March, 75% in April, and then in May, June, we're all up and running back to normal. Nothing's happened, move along, nothing to see here. So again, that was, I would say, the core of the work, to get them to realize that this was reality back in March, and not to wait until we knew exactly the extent of it in June or August, when it was too late, or July. So that was the bulk of it. And then, yes, cuts were made across the board. Obviously, the low-hanging fruit came first, but as I've heard I heard being said this week, oftentimes, first you go for the fat, and then obviously, in some cases, you need to go for a bit of muscle as well. And sadly, that's also been the case. In terms of innovation, there's so many models specific to PropTech that are being applied across the region. I mean, I think between all the guys that you have here, across the world, actually, between all the guys that you have here, you have at least that immediately come to mind 6 or 7 different models. And sure, some subtle changes from one to the next, but in some cases, very different things. Some focus only on rent, others focus only on purchasing, others focus only on leasing or getting loans. So you have the whole gamut here. And innovation is amazing. It's very specific to each market. I would say that some of these models will travel, but others need to be very specific because that's the need of the market. So I would say you're seeing everything. And my parting thought on this regard would be, I'm very enthusiastic about 2 things. First of all, even though growth has not been there, obviously this month's survival and focus on some sense of normalcy has been great. But first, I'm surprised at how many people will still move into a property that they rent long-term, sight unseen. That's been surprising to me, because the numbers have been higher than I expected, at least. And Cliff and Roberto, who share in Homey, might have different opinion, and the other guys who see this in their similar models might have a different opinion. But I've been surprised about that. And the other thing that I've been very pleasantly surprised is the ability that the teams have had to reinvent themselves and get new sources of revenue. And I think that's key for one reason. I don't think that all of the revenue that's replacing to a large extent the old revenue will stay post-COVID. But if you can manage to hang on to those new relationships that the teams have built in these times, and even 20 or 30% of that revenue becomes recurring revenue post-COVID, and you add that on top of your old revenue that will eventually come back, then I think you have the basis for a much stronger business down the road. It's several months, maybe a year down the road, but I think that's a strong foundation.
Thanks, Camilo, so much. Yeah, like new revenues and innovation actually driving those new revenues, totally relevant right now, and to maintain them in combination with the, let's say, with the regular ones are gonna make some winning strategies, definitely. Cliff, also now you can summarize what Camilo said. No, just kidding. Also, if you can elaborate a little bit on the differences between innovation in the emerging markets compared to the developed markets. Is there really a difference? Are we catching up, or is it totally a different approach?
Yeah, sure. I can comment on that, maybe on some of the prior things that people have mentioned about companies appropriately adapting, cutting. I think that's all true, but man, I would say it's been painful. I don't think any of our companies kind of presented a downside or COVID scenario where we said, looks good, or too conservative. Actually, you guys should dial it back. It was, many iterations of, we need to do more, we need to be more conservative. And so I think that was a common theme, and nobody was unique. And some of that's the optimism of the entrepreneurs in which we invest in. And that's what, oftentimes makes these folks great and great leaders of business. But I would say, just from some of our personal experience, it took some work to, I think, adjust appropriately to what we felt comfortable with. And admittedly, some of that's still ongoing today. I think the other comment that I would make, just in terms of, I think, best practices, I think for us, communication is paramount. You know, internally, we have a bit of a saying that we live by, that we kind of try to portray to our portfolio companies, which is no surprises. You know, we don't want to be surprised, so overly communicate early and often. You know, we've gone from talking about our portfolio companies to every other week to now we're talking about them every week. And in some portfolio companies, we're talking about them twice a week because they need that level of attention and communication with portfolio companies. Maybe we historically had a monthly call. Now we're having weekly calls with a lot of those companies. And so for us, I think communication has been paramount, both internally and with our portfolio companies and also with our investors. You know, somebody can always say, hey, I'm up to speed, I'm updated, why don't we touch base next week? I think that's, you can always get that reaction, but I would encourage, you know, communication early and often. And then Nora, touching on innovation, you know, it's interesting. I think yes and no, you know, emerging market innovation is on par with other developed markets. You know, I think what we do see is a lot less competition. So, you know, if you've got a bright idea in emerging markets, you know, you may be unique, or there may be less people trying to attack a similar pain point, where it feels like in developed markets, and particularly the US, there's probably 10 other, you know, companies trying to do the same thing or already attacking it. And I think the competitive dynamics in those 10 companies may create more efficiencies and push those companies to innovate faster. But the competitive dynamics around it, I think we find a lot different. And so I think that's a uniqueness between kind of developed markets and emerging markets that we see. And the other comment I was going to make in terms of EMs versus developed markets is on the innovation that we see. You know, we find as smart and capable entrepreneurs in these emerging markets. So we do not differentiate at all between the level of talent we see. And I think it's really just the competitive dynamics that we see, which part of what creates the opportunity in emerging markets.
Thanks, Cliff, so much. Just one quick note here. Actually, Hernán has just reminded me that I didn't mention that there will be some time for Q&A at the end of the third round. So I'm sure the auditorium will have a lot of questions for our great panelists today. So just hang in there, and we will have time for that in some minutes. No. So thanks, Cliff. Now, Al, how have you guys reacted to this, and how do you see innovation in developed markets? Who are going to be the winners and the losers? If you can share your thoughts.
Yeah, so for us, it's been interesting, this kind of crisis, because we obviously spend quite a lot of time trying to solve the problems that are unique to our market in the Middle East. And again, to talk specifically about the UAE, where there's no exclusivity in the market. You know, there's a lot of issue in terms of quality and data and stuff in the market. So we spend quite a lot of time, and we'll continue to, trying to solve those unique problems for both consumers and for the supply side of the market. But one of the things we, of course, realized when we went into this crisis is that those fundamentals are kind of globally applicable, right? So in a world where a number of our clients on the supply side were having to make hard decisions about where they wanted to invest, kind of it really brought to light how important it was for us just to show the value that we provide for estate agents and for brokerages, which is maybe something we hadn't done as good a job of before, because we were focusing in on solving these bigger, you know, like local problems, you know, which are really complex, kind of product-driven problems, and frankly, a bit more interesting and exciting to work on than really kind of demonstrating value of a product. So I mean, it's really kind of go back to basics on some of that and really think about what are we providing on both sides of the marketplace, and doubling down on that and making sure we do that all perfectly before we start doing kind of the exciting, innovative stuff. I think that was a big learning for us, is to always make sure those brilliant basics are in place. Then in terms of reacting as well, at the same time, you know, we had to make hard decisions. We had to look at all of our markets and decide which ones do we really want to focus in on, which ones are our future growth engines versus those that maybe aren't performing where they need to. So, you know, and we made those decisions very early as a business. You know, we're talking kind of end of April going into March when we saw kind of what's happening globally, which I think was the right decision to make. But at the same time, when we went into the crisis, our product and our dev teams managed to design and deploy virtual viewings, so literally live streaming viewings from our own platforms, so not doing it via Facebook or via YouTube, but fully integrating it into our own platforms with kind of like a full kind of chat capability in 2.5 weeks, and get that live and deploy that. Which was a phenomenal feat by them. And then also what we wanted to look at as well was, what were the opportunities that would potentially present themselves. So we launched this new product. We looked globally at things like Facebook CPMs, at the kind of the cost on things like YouTube, and you could see very clearly that travel and lots of other things pulling out, but globally CPMs have pushed these new products and to work on some of our branding. Again, with the theory that in the world of property, there's going to be pent-up demand. People need to move. People's contracts will be ending. We're a predominant rental market. So we kind of invested a fair amount in kind of branding as well, where we saw our demand drop and we didn't need to invest as much in our performance marketing, for example. In terms of winners and losers, we saw kind of our number two in the market, a property vertical, merge with the largest horizontal in the region. So I guess you have to make a judgment whether that there are winners or losers in that. But like we weren't forced into a position where we had to merge with anyone, so we were very happy about that. What came with that, though, in terms of having an aggressive competitor, was it meant that our clients, our revenue drivers, had quite a lot of power because they could play us off against each other in terms of demanding different drops in terms of pricing and stuff like that. So that was a pretty hard thing to navigate over those first few weeks. So yeah, I think overall, the key lessons were that we make sure your brilliant basics are in place and that you're proving value on both the demand and the supply side. Because if you're not doing that, all the innovation in the world won't matter, because that's kind of going to be the core of your kind of day-to-day business. But then also look for the opportunities that present themselves, right? What are your competitors not doing? And that's what we really tried to do, is to kind of see where our competitors weren't doing things and to try and move into those spaces during this time and take advantage of that as much as possible. And then in terms of winners as well, it's just following the data as well. It was really interesting to see that over lockdown, a huge increase in searches for villas with gardens, right? Think about Dubai. There's people that are stuck on the 45th floor in an apartment with no outdoor space for 3 weeks, right? So we saw a surge in searches for balconies, for villas with gardens, swimming pools and things like that. And again, we tried to kind of bring all that into our messaging and be very current and take advantage of the data as well and use it in a positive way.
Thanks so much, Al. Totally, like, it's also refreshing to hear about the fundamentals regarding whether this is an emerging market or a developed market. No, there is always basic fundamentals that we definitely need to take into account. No? Thanks for that. So this is it for the second round. Now the first and last round, the third and last round. Obviously, and just as with what Camilo was saying before, let's look towards the future. Now, what's next? Eventually, this crisis will end, or at least the COVID-19 will be part of our regular lives. And now we are entering, depending on the specific market, but we will all enter into the new normal, or the so-called new normal. No? So if you can share, how do you imagine the future for Proptech, specifically in emerging markets after this crisis? No? How has this crisis changed your current model? Radically, or just like or very tiny changes? What actions are you taking or will take in order to make your company stronger? How do you see collaboration amongst entrepreneurs and investors, startups? Is there a new relationships built towards this? Or do you see an exodus happening from cities to suburban areas, maybe less crowded areas, kind of like a nomadic behavior? And also, if you can address, do you think if there will be some or additional venture capital money to fuel growth? Or what about M&A integration, consolidation of the industry. Let's hear a little bit from you, Roberto.
Sure, thank you, Nora. I think it's a very interesting set of questions that you asked over the conference, and thinking about the future is probably the most exciting part of it. One of the things that we're thinking about and looking at is that there's markets like the office markets that hadn't really been disrupted by technology. I don't think WeWork, it's really an innovation or a technology. I think WeWork, we're providing a service. The innovation part of WeWork came from building a community inside the office market. I think that was a great innovation, nothing too difficult to replicate, but they did great. However, this crisis has opened up the idea of what is going to happen to the office segment. I think your question is great. I'm starting to see pick up interest of people buying B offices in suburban areas because a lot of people want to stay out. Yesterday, I was reading I was at a McKinsey conference on real estate, and they mentioned that 58% of people in the US want to continue working from home. I think this is remarkable because people have complained so much about looking after the kids and working and teaching and working while they're teaching and working and living their lives. You and I, Nora, talked about it, how difficult it is to have kids and to work at the same time. And 58% of people, even with that, are interested in continuing to work from the office. Why? From home, sorry. Why? Because they prefer that mess than commute time. 58% of all people prefer to have their kids at home and help them than to spend time commuting in the US. So that's an outstanding number. Especially thinking that eventually kids will go back to school. So people really would like to stay working from home. So I think the way we think about office and housing is going to be very relevant. I also think I've been tracking very closely all the technology companies saying that they will have remote offices, or they're shutting down their offices and so on and so forth. I think there's going to be a lot of trends and things that we need to tap into. One of them is Mark Zuckerberg last week said, yes, we want people to be remote, but the salaries are going to be adjusted based on the cost of living. So Mark Zuckerberg is not really thinking about how employees are going to be happier. What he's trying to do is to outsource jobs to other parts of the US, and, which is great, to other parts of the world. So now you don't have to be at the corporate office to have an important high-ranking job for this. All of that is going to have an impact on the way we think about offices. However, offices are not going to disappear. Offices have long-term leases. It's a $2 trillion market just on the debt side in the US. It's a massive market that will eventually change, probably more to flexible kind of offices and so on and so forth. So this crisis has really refreshed my view or interest on looking at things happening in the office sector. However, I think housing is also very, I think at the end of the day, people are going to go back to their homes and like somebody was mentioning, people are starting to look for villas with gardens. I just also read a statistic in Spain that now that the economy is back to open, people are looking for 30% more people are looking to move to look for homes and apartments. And sadly, the reason of that is that couples are splitting up. After spending 2 or 3 months together, couples or families are splitting up, and you start to see an uptake on demand for new spaces from them. So I think in the short term, there's going to be a lot of things happening on the residential market, more people moving and looking for places to rent. I think it's a rental play. And a very sophisticated market on the office market. I think that's something that I'm really keen about looking really what's going to happen, and very excited to work with people that are doing things in between. I've been talking to a company that it's in an emerging market that is doing great things in the way they manage condominiums on residential side, and now they're really launching or starting to think about launching the operations for the commercial part of the business as well. So that's it on my side.
Hey, Roberto, it was interesting on the office. You know, what I think is a bit ironic is like these tech companies, you know, Facebook, Twitter, they advocate so much about their company culture, right? You know, the environment in which we work under, you know, the office, it's a different environment. We have a different culture, and they're the leaders now in saying we're going to work from home. So it's a bit, it's a bit interesting that these, the leaders in the culture environment come work for us are now saying, we'll go work for home. How is that going to change the kind of the marketing pitch from a culture perspective, and how is it going to admittedly change the culture? I think the other interesting thing that I'm keen to monitor on the work from home is I think a lot of the employers today are saying they're not noticing significant reductions in productivity. People are typically pretty productive at home, which I think I'd agree with, but we also have to be mindful of this is an environment where we're working from home where shelter in place orders are around. So a lot of us have nothing else to do other than work. But if I can go to the gym, I'm going to go run errands, it'll be interesting to see how the productivity will change when some of these shelter in place orders are lifted as well. Sorry, Nora, to jump in there.
Camilo, now you're
No.
in trouble because you're in trouble, Camilo, because now Clifford spoke before you. So I don't know what you're going to do now.
Very easy. I'm just going to say what Cliff said. That takes care
No,
of that.
thanks, Camilo. Just go ahead, Camilo. Just wanted to mention on this last comment, Cliff. Totally. I think we are all in a crisis mode, no? So as you were saying, we have nothing to do but work and help and do some homeschool with the kids, no? But we are all under a non-permanent or temporary stage. I don't know how this will maintain on working after this wouldn't be if this wouldn't be a temporary stage, no? But go ahead, Camilo. Just very interesting what Cliff was saying.
Is it on to me, really, after Cliff? That's so much pressure. Okay. No, look, I'll say this. We are firm believers that models will need to adapt. Also, given the stage that we normally invest in, it's not uncommon for us to see one of our portfolio companies pivot and just realize it wasn't this way, it's this way or that other way. And so we're very used to that, and I would say generally very open-minded to models adapting and changing. And there's going to be a lot of that. Also, I think there's going to be plenty of opportunity, and things are going to change. Look, let's go to the basic. There's going to be unemployment that we're seeing it in the US already and other developed economies. It's going to happen. It's not just a work from home thing, it's also unemployment and how that affects credit overall. So for the vast majority of companies in all of our portfolios that have to deal with some sort of algorithm that determines what's the best tenant to match with a landlord, or whom can you give credit to or whom can you not give credit to, that's going to affect them, right? If you have companies that are jumping from single digit or very low default rates to maybe low double digits default rate, that can break a model. So there's going to be a lot of change. There's going to be a lot of adapting that companies will need to do. But there's also going to be a lot of opportunity. And Roberto was mentioning in his first intervention, he was mentioning the number of friction points that exist in all real estate transactions to this day. And so obviously for us, that's a no-brainer. The more friction points that a traditional business presents, the more opportunities there are for innovative companies to wedge in there and create better ways of doing things. Cheaper, more efficient, faster. And so I think this is opportunity and not on the contrary. I also agree, as has been said, that I like very much more that we are right now focused on rental models than we are on buying models, because I think those are gonna take a hit. Or certainly there's gonna be a lot of pressure on the margins because prices are gonna go down. So unless these companies can also internally reinvent the models to increase their margins, they're gonna suffer. So I prefer to be in the rental space currently. And I also think there's going to be a lot of collaboration in the form of M&A that's going to be born out of necessity. You're going to see a lot of companies that were raising rounds being either acquired or doing equity swaps with companies that are maybe in a better situation. And you're going to see companies that were only in one region, only in one country, in one region, become more global or more regional players via merging with other companies that are in similar situations or where they can complement each other. So in any case where you have a model that has several friction points and you're not the sole solver of all those friction points, and you can partner with other companies that are solving some other points in the value chain to create a more complete solution, I think we're going to see a lot of that as well. So it's going to be interesting times, and obviously the more resourceful, this has always been true, but I think this is going to be more true than ever now. You were asking, Nora, before about how we see the amount of VC capital available, and that's certainly going to decrease. It's going to go down. That's certainly a reality for our region in Latin America, and for more specifically for Mexico, where very, very few players will have dry powder to invest in the coming months, maybe in the next 12 months. And obviously fundraising is going to be difficult across the board, not just for companies, but also for managers. So there's going to be a constraint there, and that's going to make it so that only the more resourceful rise to the top, as has always been the case. But I think that's going to be clearly exacerbated given the current situation.
Thanks, Camilo. Cliff, some more thoughts on the future after this?
Yeah, residential, we've talked about a lot. I think we still, I think it's showing and it's proving in the US at least. I think the Multifamily Housing Association came out with May numbers as of the 20th of May, and something like 90% of people had partially or fully paid rent in the US, which was only a couple, 2 points down on 2019. I think people, home more than ever now is a place of importance, particularly in these shelter in place. And as people are prioritizing, if I'm thin or tight on cash flow, what payments am I going to prioritize? And I think we've seen the resiliency of housing and residential across all markets. I don't think that's unique to the US or any one market. So I think we see the resiliency of residential and housing going forward as important. And I do think Roberto was touching on some of the shifts of, people wanting to be urban versus suburban. In the US, there's the single family rental space versus kind of more urban multifamily space. I think there's been some leading indicators, statistics in New York of people moving into New York is down significant percentages, and people moving to like Connecticut and the surrounding areas are up like 80% in traffic of looking at listings for outside of cities. So there's some leading indicators that would suggest that. I'm not sure we're big believers there's going to be transformative changes in cities and, people leaving, and there's this mass exodus from cities. There may be some in the near term, and there may be some on the margins, but still think cities are going to be important as ever. There's still going to be a drive to jobs in urban centers. I think in some respects for young people, they're even going to become more affordable now. So I think it's still going to attract young people. Maybe cities historically were attracting a demographic of maybe 20 to 40 years old, and then thinking about moving outside the city, maybe people are making that decision earlier than they otherwise would have. But I still see the cities as an attractive place for young people, and I don't think we see a huge transformative shift in where people want to live in the long term.
Thanks, Cliff. Yeah, and cities are still going to be cities and important for everyone, and economic centers. Totally agree. Thanks. Ross, sorry about changing a little bit the order here, but Ross, if you can share your thoughts on how the future is going to look like from your perspective. You're in mute, Ross.
Sorry about that. Yeah, I was going to say, we, I guess there are two hands to the argument. On one hand, we couldn't be more excited about the fundamentals of the Proptech space. I mean, there's no doubt in our minds that the way real estate gets transacted in 10 years will look radically different. And I mean, one way I think about this is to say, people are now questioning whether they should be buying their education in 4-year increments, right? Like, why should I commit to, spending X thousands of dollars at a university for the next 4 years? Can I disaggregate that? And to some extent, real estate isn't different from that. Why should I make such a long-term commitment when I can, in essence, have a Chinese menu to choose from, either every, other month or every other year? So technology is completely going to disrupt that. It's super exciting. And also, we believe that it's going to be primarily local entrepreneurs with local or regional businesses who are going to provide those services. And, as I said, we couldn't be more excited about that. On the other hand, we are going through a really tough time. And I think the way I would illustrate that is to say, we have to think about PropTech somewhat distinctly from real estate. So we all see what the macroeconomy is doing. If the real estate markets are down 15%, people lose their minds. When we're talking about PropTech being down like 15%, nobody is going to notice. We're in an environment where PropTech funding can be down 80%, right? So that's the reality of our short-term environment. If you're launching a neobank in Colombia, like, people will line up to fund the next 6 startups. Nobody's really lining up to fund, dozens of PropTech players today. It's not the hot asset class in 2020. And so I think we have to contend with the fact that while amazing businesses will get built, that'll take a little bit of time, and they're not going to be flush with capital. And if you are flush with capital, many of them will not be. And so I would, echo Camilo's comment, which is, we do think that there will be some consolidation in the space. We do think that players have to be prudent with their cash. I don't think PropTech is not a space of excess. We don't, by and large, know entrepreneurs who are, operating at negative cost margin. But having said that, people will have to watch the bottom line a lot more closely, and of course, keep the balance between margin and growth in such a way that their businesses still look attractive. And so we're sober about the short-term period we're going through, but and kind of flight to quality is everywhere around us. But we think the space is going to be very interesting. And so if you're an entrepreneur in the space, it's about getting through this crisis period and then getting through the next 6 to 12 months before investors are willing to take a fresh look at the space again. That's kind of how we see it.
Thanks, Ross. Also very refreshing. So you believe that this crisis is just accelerating the trend that we had already that we were already at, right? Maybe accelerating, maybe switching it a little bit, but it's not totally a transformation for PropTech.
Yeah, I didn't say that, but you're right. I wish I had, and this to some extent predates this crisis, but is certainly accelerated by it.
Thanks. Al, last but not least, if you can share your thoughts.
Sure. I mean, in terms of changing our current business model, I think what the last few months has done is really shone a light on, as a group, where we're strong and where we're not strong. So where should we be focusing moving forward? And made us made a few hard decisions about that. It's also made us kind of realize where we're reliant in terms of generating revenues and where those potential weaknesses could be if something else happened. There was a crisis, and I think that's kind of going to inform our especially commercial strategy moving forward in terms of the type of system that we use. In terms of actions that we're taking today that are going to make us stronger, like I alluded to earlier, getting those basics absolutely nailed and brilliant is something that we've dedicated ourselves to over the last kind of 10 weeks, and will continue to do so over the coming months. And then also kind of just really thinking about, you know, what are the big bets that we can do? So I guess doing less things better rather than trying to do 50 things at the same time, just really kind of zero in those 3 or 4 initiatives that we really think are gonna make a big difference. And also, look, when we talk about kind of some of the things that kind of surround us as a property portal, we have various kind of Proptech kind of add-ons or parts of the group that aren't necessarily, or before weren't necessarily bought in and central to what we do, and we're starting to now kind of bring those closer to the core brand to, you know, kind of create one defensibility, trying to kind of demonstrate to our clients and consumers how our different products and different bits of technology work well together and kind of enhance the experience. So that's something else we're looking to do more of. In terms of exodus happening, in the UAE, they're kind of predicting that up to 10% of the population is not going to go to the suburbs, they're going to go back to their home countries. So there's certainly going to be an issue of exodus here. But then you look at another market like Egypt, for example, where, you know, culturally the buying of a house is so kind of ingrained and linked to important things that we don't expect to see too much of an interruption in that market, for example, because, you know, buying a house is such a cultural event that everyone has to do that we don't see that being disturbed too much. And I think the interesting thing with the VC money, I mean, it'd be interesting to get everyone else on the panel's opinion as kind of people that actually are VCs. But it feels like this crisis has kind of more just accelerated kind of something that was becoming fairly prevalent anyway in the world of investment, which was kind of VCs and investors demanding a lot more out of their investments, no longer tolerating kind of high cash burn and you know, like non-existent profit margins, you know, the whole WeWork fiasco and stuff like that. And at least from my interactions with kind of my board, you know, knowing that, you know, they were already being a lot more demanding and wanting us to investigate certain parts of the business to ensure that that wasn't the case. So it feels like this has just kind of really accelerated that process, and that was a change that was already kind of happening in the world. And in terms of mergers and stuff, as I say, we've already seen one merger in our region with kind of the number 2 vertical merging with the number 1 horizontal. You know, and as and when M&A opportunities come up, it's something we always look at, and I imagine there will certainly across MENAT be quite a few more, because the whole region has been hit quite hard. So it'd be a good one to keep an eye on over the coming months, I think.
Nora, did we lose you, or are you just in mute?
Do you hear me now?
Now we can hear you. Yes.
Okay, perfect. Thanks, Al. So we have finished with the first part of the webinar, going through all this perspectives from the gentleman here in the webinar. I'm sure there are some questions from the audience, as I was saying. So if everyone can send them through the chat, and the guys like supporting will address them, or I think you will send them to me so I can.
If they use the Q&A section of the application, that's easier.
Perfect. And also remember to vote on the poll, so we can all do this or improve this webinar. Will be very good to know what's good, what's interesting, or any changes that might need to be implemented for everyone, and for these webinars to be more interesting for everyone.
Indeed.
So chat or mic is open.
So,
yeah.
Nora, there's already a question on the Q&A by Roberto Perez. I don't know who wants to take on it.
Yeah.
Or should we type, or how do we do this?
Can you read the question, Nora? Or
Sure. The question is, real estate has always been considered somewhat of a safe investment for emerging investors. Given the possible lower demand for commercial real estate and potential uncertainty in the housing prices, do you see this investment being significantly reduced? How will this affect Proptech startups?
Who wants to take
I would say emerging market I would say emerging market investing, anything in emerging markets is probably not deemed safe. So maybe we use the term relatively safe vis-a-vis other things. But it's interesting, I think, people, investors, more institutional capital, it's interesting in emerging markets. And in Mexico, for example, the Afores or the pension funds, there was regulation that changed about 2 years ago that allowed them to allocate more capital internationally. And that's all they've been focused on. And speaking with different family offices, high net worth capital in Mexico, for example, wanting to get exposure outside of Mexico and diversifying. So we're seeing some capital outflows from some of these markets, which may create opportunities. But it seems, if you've got capital and have an opportunity to invest outside of Mexico, perhaps you're thinking about that versus buying an extra condo or a handful of condos in Mexico City. That's at least my impression. But for perhaps the more retail type investor that doesn't have access to that, I do see a trend back to more bricks and mortar type real estate investing. In Brazil, there's been some more creative kind of FII structures attracted to retail capital in real estate. And I think some of those are feeling some pain as a result of the COVID crisis. And so you may have kind of more of the retail investors saying, shit, I'd rather just own a unit myself than subject myself to some of these kind of other more creative structures that have been introduced. So perhaps you see a little bit of contrasting between a retail oriented investor and those maybe more institutional that have access. That's kind of what I'd be seeing.
If I may add, I think the question may be also focused on a personal investment side. Like people in the emerging markets usually try to invest in real estate to avoid evaluation and losing money and losing value on their money. I think real estate is still relative, also for a personal investment perspective, relative to the rest of the economy, especially if you can trade in dollars. So if you're buying a house in a specific area of Mexico where you can buy it in dollars, or some assets like industrial or office space that are traded in dollars can also be a good diversifier. You want me to read another question, or anyone wants to continue looking at this, answering this one?
Let me take a stab, Roberto.
There is a...
And this is a question, going for Alastair, which is like the number 2 vertical merging with the number 1 horizontal sounds like a potentially dangerous situation. How are you preventing getting squeezed? And also, given the fall in sale prices, have you seen your ARPU drop? And how have you dealt with that situation?
Yes, so it's a great question. So potentially dangerous, but also kind of exciting and challenging at the same time. I think, look, one of the we've invested long term in especially things like SEO, right, and really trying to dominate that high intent area when it comes to that. So we kind of, when you look at something like that and you look at, say, the top 500 high intent searches you have on Google, when it comes to organic share of voice, Property Finder has more share of voice than both of those brands put together. So we're fairly strong, and we've got a pretty good defensible position when it comes to that. We also like to think that our product is probably slightly superior to that, and we've kind of often operated in a slightly different part of the market. So historically, when we first started, we were slightly higher end, whereas our competitors were slightly lower end, and there's kind of been like a race to the middle. But we started kind of from up here, which means on the supply side, we've kind of always got the ability to put our clients in front of consumers that the other people in the market couldn't do before. But it's also about, about us thinking, about how do we invest in our brand long term? So how do we make sure we keep driving that demand side share of voice, which is something that we've always kind of worked really well with. And then, the hardest thing, which has always been a problem when you have an aggressive number 2, especially the marketplace vertical, is often the way they become an aggressive number 2 is by undercutting you from a pricing point of view, right? And that's how you often maintain being number 1, especially from a revenue point of view, is having good pricing. So the interesting thing to see is to see what happens with that, because now they've kind of merged, and it's part of NASPA's, whether that number 2 can continue to do that, and what happens on that side. So how are we preventing ourselves from getting squeezed? It's about keeping our eye on the prize, which again, doing those brilliant basics really well, continuing to invest in our brand, continuing to kind of deliver what the consumer needs, and then also at the same time doing as much as we can on the supply side with our clients. To the second part of the question, there's been a fall in sale prices. Sale prices have been kind of dropping for a while now, to be honest. Our ARPU is kind of in a bit of a crazy situation right now, obviously. We've done a lot of kind of discounts and stuff for quite a lot of clients. So our ARPU right now probably isn't something that's kind of what will be in the future. Look, the interesting thing about especially the UAE market is that even in 24-hour lockdown, transactions were happening, fairly substantial transactions were happening. So we certainly think that the market isn't in anywhere near as bad a state as it was in 2008, for example. And then in some of our other markets as well, we're not seeing kind of as much of a drop as we might have done. So hopefully that answers both those questions.
Thanks, Alistair. There are some other questions. Let's do a couple of more, and let's try to give short answers so we can address them both. So the next one is, well, first, thanks for this webinar. I would like to hear one or two particular ways in which Proptech could help to reduce the frictions in residential market transactions in Mexico.
I can tackle that very briefly. One or two particular ways. Well, just if you take the value chain, think about the time that it used to take to get a property rented versus how you can be a Proptech, accelerate that. For example, let's say from determining credit worthiness very quickly, that right there is weeks. And that's a strong friction, and the amount of value creation that resides just with accelerating that process. That's one. Another one, ensuring that you provide a suite of services to buyers or renters or sellers. Those services can be credit, they can be background checks, they can be digital contract signings. There are so many, but you asked for one or two. I think I've already named 4 or 5. I'll pass it on to Ross, who also wanted to pipe in.
Oh yeah, sure. So look, I think it's underappreciated what liquidity on a market, what volume on a marketplace can do. And I'll give you 2 examples, one in terms of transparency and the other one in terms of availability, and I'll exaggerate a little bit. But if you go to your local real estate broker and you say, hey, if instead of having 1 balcony, I had a 2nd balcony, but I sacrificed my 2nd bathroom, like what would that do to my price? And your broker is going to look at you with blank eyes. They don't know. Data can answer those questions, right? And these marketplaces have all the data, which means they'll be able to give you transparency on price. That can filter all the way back to the construction company because they can build to what the current needs, possibly the future needs of the population are. So that's about transparency. And the second thing that volume does is it creates availability on the long end of the tail. So if you're a handicapped person and you think about installing something special into your residence, how are you going to monetize that? Well, if you have a marketplace that has this functionality, now you've created a market for what you've created yourself. And so it gives a much broader available inventory set and convenience to the user in addition to transparency on price.
Thanks, Ross. So I think we only have time for one last question. And it is this one. So how do you get involved with other construction stakeholders in real estate tech moving forward? Is that something valuable? Sharing the risk with contractors, materials producers? Would that data generation along the construction value chain enhance the property management? Who would like to take this one?
That one's for you, Cliff.
Yep.
We don't, admittedly, we haven't focused much at all on construction technology efficiency. So I I will not wade into waters that that I'll speculate on. So.
Anyone else? Then maybe we can go to another one. Okay, let's try to do the next one. Where does the field of work for a Proptech startup start and end? I mean, that when you talk about Proptech, you can think that the scope only comes to find a property, rent or buy it, and make payments. But there is another step forward in the lives of the people that are private residential or apartment towers that are managed by a group of neighbors or by a management company to carry everything related to reservations of common areas, payment of fees for maintenance, monitoring global incidents, and something more important, access control connected to each tenant and administrator. Is this step considered as part of the Proptech ecosystem?
I'm happy to take this one. I mean, that's Ruzgar. That specific example, we would count towards Proptech, you know, where you're in essence dealing with a building administrator to offer additional services. And like the most interesting, or I shouldn't say most interesting, but another example that I found pretty fascinating is the ability to go and sign up tenants in apartment buildings in order to provide kind of a group buying for electric and gas purchases or solar panel purchases, like, you know, in essence, bringing tenants together in a community buying format. At the end of the day, ends up touching a lot of the same constituents that our other Proptech businesses touch. So we would certainly put it under that vertical. So what you're talking about, which is about building maintenance systems and tracking systems and access systems, we would also probably consider under Proptech.
Thanks, Ross. So I think that's it for today. Thank you so much for the panelists, definitely, for sharing your thoughts on this very specific context that we're living at. Thank you, everyone, and I'll leave you with Camilo and Hernando for some further comments.
Yeah, well, thank you very much for our panelists, and thank you everybody for joining us today. You know, amazing insights from very different markets on a very hot vertical. So this, as you know, will be recorded, and you know, happy to continue the conversations. Before signing off, thank you very much to our sponsors, IDB Lab, and thank you very much, Nora, and all of our distinguished panelists for joining us today. I remind you that next week we're going to have a very exciting conversation on logistics and last mile delivery, where we have some confirmations from people from SoftBank, Mercado Libre, Rappi, IFC, Axel in India, among others. So we're certainly expecting, you know, a very, very interesting conversation to be had as well on that vertical. So thank you very much for joining us today. You know, stay safe, keep safe. And well, let us continue the conversation together about rethinking Proptech. So thank you very much and have a great day.
Thanks, everyone.
Thank you.
Thank you.